afternoon, everyone, and thank you so much for attending today's webinar presented by Winvale and Blank Room on the top 10 compliance risks for GSA Schedule contractors. This past year has created unprecedented challenges for GSA Schedule contractors. New legislation and acquisition regulations are forcing GSA contractors to understand and properly implement new compliance requirements. Consequently, the government has sharply increased their contractor audits and enforcement activities. Many of you may have already experienced some of these impacts. Our speakers today, Al Crutchman of Blank Room and Brian Dunn of Winvale, are here today to give you information, tools, and insights to best navigate the difficult terrain. Al Crutchman has over 30 years' experience advising government contractors in all aspects of business. Al started his career with the General Counsel of the Navy and the U.S. Treasury Department, and has a very broad-based public contracting practice, which is described in detail in his bio attached to the slides today. Brian Dunn is the managing and founder of the Winvale Group. Brian has over 15 years' experience in government contracts consulting and compliance. During the presentation, please feel free to submit your questions via the Q&A tab on your screen. We will reserve the last portion of the webinar to answer any of your questions. Now I will pass it over to Brian for the first topic.
Thank you, Heather. I'd like to welcome everybody today to the webinar, and we appreciate you joining us to talk about GSA contract compliance. Something about Halloween being a perfect day to talk about scary issues like compliance. I'm Brian Dunn. I lead the audit services here at Winvale, and I've had the pleasure of working with Al on a number of audit engagements. Not surprisingly, most of our engagements are self-audits. When Al and I can both tell you firsthand there are great benefits to a self-audit. You know, when we're in control of the scope, the timeline, the nature of disclosures, and you don't have to worry about the stress and deadlines of working with a government auditor. So today we're going to go through the top 10 compliance areas that we see GSA contractors really struggle with and offer some recommendations for each. And because you can spend days talking about contract compliance, Al and I are going to try to hit the high points and get through these 10 within the time allotted today. There aren't many cartoon strips for government contracting, but here's one from Dilbert. The reason I put this in here and I love it is that it demonstrates that even if you win a big $1 million contract, there are a lot of compliance risks that come with those rewards. First, we'll talk about GSA Pricing Compliance, and all GSA contractors should know GSA's Price Reduction Clause. It's the backbone for the schedule program, and it's probably the cause of many sleepless nights. So the GSA establishes a price against a contractor's most favored customer, or was sometimes referred to as a basis of award customer, and that pricing relationship must be maintained throughout the contract term. Should there be a change in the basis of award customer's price, GSA is entitled to the same discount, so to maintain the original pricing relationship. The first problem that we see from GSA contractors is there isn't insufficient training and communication to the company. So if you think about it, the price reductions clause has nothing to do with federal sales. It has everything to do with your commercial market and your commercial sales. So we also see that GSA contractors don't have a system in place to monitor the basis of award discounts. And for those who do have a system and have access to commercial sales data, employees often don't know what to look for and what causes a price reduction. So we recommend regular training and updating your sales policies, more particularly the commercial sales policies. Our clients will often ask us, what is the easiest way to fix compliance? And my first answer is always training. You're going to see that as a theme in today's webinar. It's definitely the most easiest and cost-effective measure to get the greatest results. So first starting and making sure your staff knows about the GSA contract and what discounts that they can offer to what customers. In addition to updating sales policies, try to establish and enforce a pricing floor, which is simply the lowest price you can offer your basis of award customers. And lastly, don't just look at pricing. Remember to review concessions, which is what most GSA contractors tend to forget about. This is one of the first things that GSA's Inspector General will review. And we've included a definition of concessions here so people can understand really what this is and why it's important. Next, we'll talk about GSA pricing compliance. So how you sell your GSA contract to those eligible GSA buyers. The Schedule program is a federal contract, so GSA restricts who you can sell to, and you need to know who can buy from it. Also, GSA can be very sensitive to contract scope, so knowing that contractors can only sell the products and services approved on the schedules that are approved. Common issues with GSA pricing compliance. First, employees just don't know who can buy and use your GSA contract. They don't know when to put their GSA contract number on a quote and how to handle it when a buyer wants GSA approved items and non-GSA items. So you basically have this garbage in, garbage out process. So if not done properly from the beginning, which is on the quote side, it probably won't be invoiced correctly, and it probably won't be reported correctly in your quarterly 72A sales report. So recommendations here, start with employee training. We're referring to the people who are responsible for your government market, from point of sale, sales and marketing, all the way through operations. You first ask to download the GSA eligible entities PDF from GSA's website, which will list all the eligible buyers. And this document is usually updated once a year. It's a great document to tack forward and reference. Next, if you can, establish a GSA pricing desk where they can monitor compliance and they can answer questions for other employees. And you have a central resource. Lastly, self-audit your quotes, your invoices, and your quarterly 72A sales reports. We've seen firsthand GSA auditors will use the FFATA website, which stands for Federal Funding, Accountability, and Transparency Act. And this will show how your federal buyers are reporting that contract action with you. All you need to do is just plug in your DUNS number, and you can compare those records against yours, and you can identify issues. Terms and conditions are another important compliance area. Most of the time, there will be few GSA terms that are different than your commercial terms. So these can include a minimum order threshold, volume tier pricing, prompt payment terms, invoicing terms, delivery and shipping, warranty, restocking, return policies, labor qualifications, and restrictions on subcontracting. Common issues that we see with terms and conditions on your GSA contract are not correctly communicated to the buyer. So most of the time, it's because employees just don't understand the uniqueness and the differences in GSA terms and conditions against commercial terms and conditions. We also see prompt payment issues. We've seen GSA's Inspector General recently finish a detailed analysis where they went through and found that when a contractor shows the agreed upon prompt payment term on the invoice, something such as 1%, 15 days, net 30, the government takes advantage of that 1% prompt payment 60% of the time. So now they've got a tool in hand, and they can go audit contractors' invoices, and if the payment isn't on the invoice, they can ask for a refund. Or I should say they could demand refund. So recommendations here start with training. Since people can forget throughout the year, after you establish some training, make sure you've got resource material that you can make available to employees and distribute about the GSA contract. And just look at the potential differences with a delivery term. Your commercial term might be the commercial customer pays for shipping, you'll ship it anywhere, and it'll be 30 days. Opposed to that, a GSA customer may get free shipping within the continental United States, and it has to be there within 2 weeks, and has to have a material safety data sheet with it. So very inherent differences between the two. With that, I'll turn it over to Al, who will talk about small business contracting.
Thank you, Brian, and welcome to everyone. Just a couple of points that I'd like to follow on with Brian's presentation. Sometimes training, of course, is essential, but in the case of GSA sales and in case of pricing compliance, the company needs to have a top-down command and control structure, because what will happen will be that the sales force will be working hard to try to reach the best deals, and unless there is a top-down command and control system to stop deals that would create liability due to price reductions violations, your training won't help. So note that in addition to training, a top-down command and control structure needs to be imposed over those sales personnel who have the ability to set pricing. And of course, what you're trying to do through these measures is avoid claims. You want to avoid receiving the letter from the auditor or from GSA demanding payment of $7 million back because their audit has indicated that you violated these substantial price reduction provisions over a period of time. And and having a command and control structure and training will help you avoid that issue. I am going to touch on a few topics. The first one is going to deal with this small business size and status issue. There can be GSA schedules or competitions within GSA schedules that are reserved or set aside for small business contracts, and of course there can be freestanding non-GSA solicitations that are reserved or set aside for small business or small disadvantaged business or any of the other preference categories. Determining whether your business is a eligible small business is at some level it appears to be straightforward here to the size standard, but when you get into issues with respect to the concept of affiliation, which I'll mention in a minute, it can become a gray area. The important understanding is that if a firm represents itself as a small business, it must meet the standards for small business created for that solicitation under the NAICS code, and the NAICS code will usually be geared to either the number of employees or the annual revenue. So it's important to verify compliance with the NAICS code standards before making an affirmative representation of small status. And then, as we indicate from the other part of the slide, we also have issues with respect to firms that are small disadvantaged, women-owned, veteran-owned, hub-zoned. In other words, you have size and status issues that come into those preference categories, and it's important to be sure that you are correct in each one. Now, with respect to issues that we see often in terms of business size and status representations, we see situations where there's unclarity, failure to properly calculate revenue. Some firms do not understand how to compute their gross receipts. Some firms just do not spend enough attention enough time to focus on whether they have crossed the line over the 3-year average annual receipts test. Another common failure is failure to count part-time employees against employee limits. Some firms believe that part-time employees are exempt. That is not correct under the regulations, and it's essential to ensure that that part-time employees are counted against the employee limits where there's an employee limit size standard. Another common mistake is failure to recognize transactions that are likely to create affiliation. As you recall, I mentioned a minute ago that in addition to size, which is size status, which may relate to the number of employees or the annual revenue, another category of relationships that can cause a firm to lose its small business status is the concept of affiliation. And in short, affiliation is another term for control. If there is affiliation between two entities, meaning that one controls the other, or they're both controlled by a common parent, then the number of employees or number of dollars are aggregated for purposes of figuring out the size. So a common pitfall that is encountered is companies will do transactions. Companies that may be eligible as small business, and they may enter into an equity investment. They may enter into a loan agreement that effectively allows the lender to control the business. They may have entered into or may start their business being totally reliant on another firm. Again, that is something that will create affiliation and preclude the company from qualifying as a small business. Businesses there's a belief that some businesses think, well, we'll spin off a division and just open them up as a small company and let them bid on set-aside contracts, but keep our same personnel or perhaps family members in those companies and represent that they're small. Well, there are tests and many cases finding those invalid, so you must be very careful with those issues. Another common mistake that we see is failure to comply with the new limitation on subcontracting rules, and this is an area that controls the amount of business that, let's say, the small business prime contractor can throw off to its subcontractor. Again, it's essential to understand what those rules are. They just changed in the 2013 Defense Authorization Act, moving from essentially from a cost standpoint to a price of contract measure, and we have materials on our website that go into details on that. Another mistake that we see time and time again is the failure to act within the 5-day window when a competitor that you believe is not eligible due to size receives award. The procurement system has very strict rules on that, and if you see a competitor who you have evidence is not small, you have to act within 5 days. And so many firms call us up and say, hey, these people clearly weren't eligible, I'm sorry. And we say, well, I'm sorry, you had to raise that 2 weeks ago. So understanding that. And then failure to understand the rule on status designations, I referred to those earlier. Those deal with situations where it's let's say a woman-owned firm or a veteran-owned firm. The individual upon whom eligibility is based has to be personally and substantially in control of that company. So we're recommending that contractors proactively audit their eligibility. Test yourself. Ask yourself the hard questions about whether or not there has been something that's impacted your organization or business practice that may threaten your small business status. Also, if you're a large business and you are a subcontractor on a set-aside contract, you want to be sure that your prime contractor, is correctly claiming its status. I would caution prime contractors, subcontractors that are large that are subbing under small business set-asides where the small business is the prime to make inquiry of your counterparty and just ask them if they've done one of these audits. The rules on the penalty for violations have been revised recently. The Small Business Jobs Act passed in 2010, and then this past summer, the SBA amended its regulations to add something called the presumed loss rule, which essentially can cause a forfeiture of all funds received under the contract if the original awardee was not eligible as a small business. So those are some of the common issues that we see in these GSA audits and freestanding under related to small business. I now want to move to kind of the second hot area that we see in GSA schedule audits. As Brian and I review portfolios of our clients, we will always check to see if the company is a product supplier, whether or not the company has a system in there to check its Trade Agreements Act compliance. And some of you who've been in the industry may be familiar with some high-profile, multi-million-dollar cases over the last year brought by either competitors or the government against companies for selling products that were not approved, such as products made in China. Those cannot be sold under the GSA schedule, where there is a Trade Agreements Act clause in that schedule, because that country is not a designated country. With respect to the Trade Agreements Act, it's in almost all GSA schedules. You make a representation that you're selling products from the U.S. or designated end countries, and there's lists of those, and you need to specify the country of origin of those products on your contract. Now, what do we see in terms of the common pitfalls that get contractors into trouble on this? First of all, the contractor who sells to GSA should obtain from its counterparty, the supplier, a letter of supply that is conforming to GSA requirements, and essentially that indicates that the manufacturer is going to supply the needed quantities, makes other representations, and importantly that they will that the products that they are selling to this reseller are in conformance with the Trade Agreements Act. In other words, they're a USN product or they come from a designated country. You want to get, it's important and it's essential to get that letter, because the GSA auditor will ask for it on the first day of the audit. Some companies do not obtain and refresh those, which of course leaves them exposed, because remember, it's the GSA contractor, the prime contractor, that has the exposure, and it needs to make sure its documents downstream appropriately protect it. And that leads to the second bullet point, which is that if you have a supply contract with a manufacturer where that company knows you're going to be reselling its product to GSA, gosh sakes, put in an indemnity in that contract indicating that that manufacturer is going to indemnify you from Trade Agreements Act exposure if their products are not sourced from the proper places. That's just good essential housekeeping. But many contractors don't do it. And we have standard language that we supply and recommend, and so it's important to take a look at those purchase orders. Another mistake is failing to audit the products, failing to do a spot check. You open up the cartons periodically. Look at what the outside of the carton says, or ask your distributor to do that, even if it's a drop strip situation. No matter what, you are the one that are in privity with the government, and you need to audit your products periodically. Because you may find, for example, that a place of manufacture has changed, and you didn't get any notice, but lo and behold, you don't want to realize that you sold $10 million worth of non-conforming product for the last, 6 months, and now you realize that you have significant exposure for it. We recommend doing a year-back spot check just to see that you have a good compliance profile. Companies don't appreciate, the legal exposure for noncompliance. These cases throw off whistleblower lawsuits where someone in the organization sees noncompliance. They'll go to a contingent fee lawyer or file a case under seal with the naming the company as a defendant, and there could be a very large exposure if the facts are proven. Another common mistake we see is that, like in the old softball analogy, someone's trying to woof it by you. There'll be a strange designation of origin on a letter, such as assembled in U.S. from various sources, or something similar that is not stating the country of origin, but stating something different. If it's an ambiguous origin representation, it can't be relied upon, and you have to watch for those. And then when you do have those items, or you do have clearly non-compliant items, failing to timely remove them from your contract once you find them. And as far as recommendations go on Trade Agreements Act compliance, my previous slide just outlined what the best practices are for administering this, and if you decide not to follow these best practices, our recommendation is to increase your D&O insurance, and you should update your LinkedIn profile. Now, the final area, in this segment that I'm going to cover, and it's related really to both Small Business Representations and Trade Agreements Act, relates to the general concept of ethics and quality business conduct in dealing with the government. There was an old saying in a Supreme Court case many years ago that in dealing with the government you have to turn square corners, and that's a truism, but it's in the FAR with in various places where it's essential these days for any government contractor to have an updated ethics and business conduct code. Some suspending and debarring officials in the federal government will say that if you do not have a compliant ethics code, you are non-responsible and cannot get a government contract. So that gives you some idea of the importance of having and I call it a government contract-tuned ethics and compliance program that is in place and works. Now, what do we see in terms of this area? What are some of the things that you encounter, and why do we think they're issues? Well, the first thing I'll tell you with respect to why they're issues is because if you end up with a suspension or debarment problem, and you find the Inspector General or debarring official at your door, one of the first things they're going to ask for, let me see a copy of your government contractor compliance code, because they want to know how this problem happened and why. And if you don't have a current copy of your code and you can't show them training, you're going to be in a highly disadvantaged position. So some of the problems we see is that contractors haven't updated their code. I'm going to talk about mandatory disclosure at the end. But problems that we see is that they haven't updated their code. There was a significant change in 2008, which we'll touch on, called the mandatory disclosure rule, and many plans don't cover it. There's also a common mistake that generic corporate ethics codes, some that you'll find on the internet, just generally dealing with all employees will act fairly and honestly, etc. Some companies believe those will suffice. They will not, because they miss important provisions that need to be in government contractors' toolbox. Also, training isn't conducted. Companies will have these, and they will just put them in a drawer and never act on them, or if they do a training, they won't document it. Again, that's going to be a problem for the IG if they find non-compliance. And then also contractors not taking disciplinary action when there is a violation. So what are our recommendations? Update and maintain your code of ethics. Be sure it includes the mandatory disclosure rule. Be sure it includes some of the special government contract provisions. I mean, you can test it. Do you have something on conflict of interest for organizational conflicts? Do you have something that talks about the False Claims Act? Do you have anything that talks about the Anti-Kickback Act or flow-down requirements? Those are, do you have anything that deals with the Procurement Integrity Act in your plan? If you don't, it's not compliant because it hasn't been tuned for government contracts. Be sure personnel are trained. One of the more effective ways to check it and recommendations is do a blind test. Send somebody in with let's say with confidential information from a competitor that that, of course, is just done as on a test basis, and see how your organization reacts. See if the report is made to the proper person. So a blind test is a very valuable tool to spot where you may have holes. Also, ask your counterparties. You have a team member, you have a major prime contractor. Ask them, what their code of ethics looks like, because it takes two to create a problem. And then conduct training and document the training. Make sure it's part of the corporate culture. So we've covered small business, we've covered Trade Agreements Act and ethics. Those are all consistent with the theme that kind of Brian outlined, which is there are areas of special concern that need training. And of course, training is often handled by human resources departments, and human resource requirements are critical issues. So I'm going to turn it back to Brian to talk about human resource requirements.
Yeah. Human resource is another department within your company that should be aware of federal contracting compliance. It's just not specific product companies or service companies, but all contractors. It seems that Congress and the Department of Labor, they come out with a new requirement every year, and federal employment laws are always changing. So here are a few compliance areas to be aware of. Some of these that we have bulleted here come with reporting requirements. Some deal with employee compensation recruitment. Some of the big issues that we see are some contractors just don't know what the requirements are and when they're applicable. Some, like the EEO-1 and Affirmative Action Plan, that's only required when a government contractor has 50 employees and 50,000 in federal contracts. The Service Contract Act, for example, should be followed when certain non-professional employees are performing under a federal contract above $2,500, and when the Service Contract Act is incorporated into the contract award. And for many HR requirements, there's a lot of exceptions to the rule. So knowing exactly what the requirements and standards are and what you need to follow, that's the first importance. And obviously, GSA contractors and federal contractors, we're held to a higher standard. So again, there's a big culture shift and difference between your commercial side and your federal side. So when we speak with an HR manager, for example, the first website that I'll point them to is the Department of Labor's OFCCP, which is the Office of Federal Contract Compliance Program. And this department's mission is really to ensure contractors are compliant with applicable federal employment laws. They will also conduct desk audits from time to time on GSA contractors, especially those above $10 million of contract sales. So know when you're getting close to that number and be prepared. Go to the website, look at the examples that they've got, and it's a great first step. Next, for service contractors who have labor category descriptions awarded, review and know those minimum qualifications, and make sure the employee working under that category has the experience and the degree that you say he or she does. If you're saying 10 years and a master's, make sure that the person has 10 years in the master's, or you have a substitution or an educational equivalency. I know that GSA's IG office has really started to look at this and pull resumes and make sure they're getting the value that they expected to pay for. Lastly, there's some requirements such as employee compensation under the Service Contract Act that can come back around and bite you. So you can always go to the Department of Labor's website and read the press releases, and you'll see the fines and the penalties and the back pay that some GSA contractors have to pay. So be proactive. Don't wait until you get an inquiry. Be proactive and seek outside guidance if you're unsure. Well, if you're not a small business, under your GSA contract, then you're probably familiar with the Small Business Subcontracting Plan. In fact, I think it was yesterday the ISR, the SSR, and the SDB reports were due through the ESRS website. So the burden of this plan and obligation might be fresh in your mind, but essentially a subcontracting plan outlines a contractor's spending goals for different types of small businesses as a result of the sales you make through your GSA contract. This plan is considered a deliverable under the contract, and because there are a lot of issues that aren't crystal clear, I've seen a lot of contractors really struggle with how to administer this and ensure compliance. A typical subcontracting plan we may all know about can be about 9-10 pages long. There are a lot of incorporation clauses and requirements attached to it. One issue that we see are contractors just don't know how to correctly collect and report their spend data. Again, it starts with a good habit from the very beginning all the way through. So soliciting self-certifications from your subcontractors. Do you also know what the definition of a small business is and what these different types are defined as Al mentioned before? And after receiving the completed self-certifications, many GSA contractors just don't know what data gets reported. What are proportional share and percentages mean? How do you allocate it to the GSA contract? And also what it means if they fail to meet any of the goals outlined. So one area that we recommend is to make sure your self-certification form is correct and is compliant. The SBA has specific rules outlined for what your certification should look like. In fact, they require a small business misrepresentation statement at the bottom or in close proximity to the signature line from your subcontractor. This is supposed to say, any person who misrepresents its size status shall be punished by fine, imprisonment, or both, be subject to administrative remedies, and be ineligible for participation in programs conducted under the authority of the Small Business Act. Very specific. Second, if you want to count your subcontractor as a small business, you can't guess their business size. We all know that if you see AT&T or IBM, we know they're a large business. We may know of a nonprofit. They're not going to be a small business. Those are okay to guess. So you want to make sure you receive the completed self-certifications back from your small businesses. Even Joe's Barbecue Shack down the street who caters your office lunches, you have to get each and every one back. Lastly, SBA, they have recently increased these compliance reviews, which are audits. And I'll tell you, I've seen firsthand, these compliance reviews can be extremely painful. And the SBA, within the end, can impose liquidated damages on the contractor from failing to meet the goals or meeting all the requirements. So make sure you're following all the requirements, and there's a lot of fine print to this. So if there's any questions, to seek outside help. Everyone should be also familiar with GSA's Contractor Assistance Visit, or CAV, which is when the IOA comes out to visit every GSA contractor, usually 2 or 3 times every 5-year contract period. So don't be fooled by the word assistance in this CAV, because this is essentially an audit. They may not bring luggage and 2 of their colleagues and stay for a few days like the IG's office, but everything that they see and hear can be reported back to your contracting officer, which ultimately can be turned over to the IG office for further investigation or the Justice Department. Some of the compliance topics that these IOA people will review are sales reporting and tracking, which is what we first talked about, pricing compliance and advantage, maintaining the scope of the contract, Trade Agreements Act, which Al mentioned earlier, basis of award customer and discount relationship, and administrative accuracy. The most common issue by far that we see with this are GSA contractors just don't take this meeting seriously enough. They rush and they prepare at the last minute. And they don't remember also that the last IOA visit can have implications within this one, and they don't keep good records. And trust me, the IOA will have notes on the last time they were there, and one of the first things that they'll ask you is, have you fixed what was previously identified? Another issue I see is GSA contractors don't mark confidential and proprietary information correctly. We're seeing the IOA expand the scope of what they ask for, and we're seeing a lot of them ask before the visit 1, 2, 3 years of commercial and government sales data in a big Excel spreadsheet. So although they have the right to request access to your books and access to data, you need to mark it with a confidential statement to protect it from being made public. And the same can be said for anything you submit to the government that's considered commercial or is considered confidential. So recommendations, first, make sure you spend enough time and get organized. I'll often say that if you look organized, if you've got your GSA binders printed, available, you have staff available, you're halfway to a successful IOA visit. Next, download the IOA report card from GSA's Vendor Support Center website and review it beforehand. It's like cramming for a college midterm, so go through all those questions and know exactly how you're going to answer them. And after the IOA visit, ask to see the completed report card. Ask to see how you've done. And the last thing I'll say is, I've really seen GSA recently subscribe to this 2 strikes and you're out rule, which is when if a CAV visit happens and they identify an issue, like you're not monitoring the basis of award customer or something like that, the next IOA visit, if they identify the same issue, we're not seeing a chance for rebuttal. We're seeing the contracting officer simply cancel the contract. So believe me, this has been maturing over the years, this visit, and they're looking for reasons right now to reduce the number of GSA contractors on the schedules program. So please take these IOA visits seriously and make sure you prepare. And with that, I'll turn it over to Al and the very important mandatory disclosure rule.
Thanks, Brian. Just 2 additional comments about the small business subcontracting plan. It's not something that can be left in a drawer. It's becoming more essential to ensure compliance because some of the auditors and even contracting officers have been default terminating contracts. You're seeing it show up as an evaluation factor in proposals now. There will actually be something that will ask for verification of how well you have done against your subcontracting goals in the last year. And you don't want that to be the first time that you open up the plan and start looking at the 19 things that you were required to do and be 0 for 19. I've seen situations where also problems with small business subcontract plans have stopped a business cold. DCMA has come in and refused to grant extensions of scheduled contracts because of noncompliance or that there wasn't one at all. And I've seen situations with where firms have not been complying and all of a sudden find themselves having to redo their whole supply chain to dig up and find enough small business credit that so that they can meet their plan and cure a problem. So it's a serious issue that and I agree with Brian that it's essential to focus on it because it can stop the business cold, and you don't want to have to be redoing your supply chain. I've mentioned before this mandatory disclosure rule, and we've closed with this because this is something that is a recurrent weakness that we see in audits. and it's a very critical rule because in some ways it turns contract compliance on its head for government contractors. Now there are exceptions to the application of this rule, which we have in various written materials, but essentially it requires self-disclosure to the IG, the contracting officer, if the company has come into receipt of credible evidence that there's been a violation of certain federal criminal laws or civil laws. So what essentially this is it requires an active, not a passive system, an active system to ensure that the company is complying with the various laws, including the False Claims Act. And the False Claims Act is perhaps the broadest statute that's used to enforce procurement fraud claims against contractors. And if any of you have ever come into contact with it or are familiar with it, you'll know that any material contract violation or failure to make a product in conformance with the specs or miscertification of status or a host of other things can constitute a False Claims Act violation. And it's because of that, because of the reach of that law, that it's essential that you ensure that your people are trained and that you have a system that actively identifies whether there might be credible evidence of these violations. And then when that happens, we'll discuss this in the common issue. But that's the background of the rule. Failure to make a mandatory disclosure when one is required constitutes an independent ground for suspension or debarment. So by failing to disclose a violation, you may have put yourself in a position where you could be subject to suspension or debarment just on the basis of the failure to disclose. So what are the common issues that we've encountered under this rule when we do these audits? I mentioned before, we find contractors that haven't updated their codes of ethics to capture the MDR. This went in effect back in 2008, but there are, many firms have failed to update their rules and procedures. They don't have systems to recognize when a potential disclosable event has occurred. If you don't have anyone trained to understand whether a collusive bid discussion or offering a federal employee a job position or accepting a gift over a certain dollar value, if you don't have anyone that understands that those might trigger a potential disclosable act, you're not in compliance. Another problem is that contractors fail to do self-audits. They don't take a look back to see whether their current practices are creating legal exposure. I mean, do you have a current Anti-Kickback Act compliance plan? That's a special rule applicable to government contractors. And have you checked to see whether that's in effect? Do you know who has to receive the reports? That's sometimes an issue. Contractors will send an email thinking that they have raised it and discharged their obligation when they send it to when they send a notice to their COTAR, or they'll mention it in a quarterly report at the bottom to the program manager. That doesn't satisfy the requirement. So what are our recommendations to deal with that? Do a quick check of your ethics code. If you don't see anything about the mandatory disclosure rule in your ethics code, your ethics code is not correct. It's not updated, and it will be found insufficient if it's looked at. Assess whether your organization has the personnel, the training, and the experience to detect these problems. And third, like I suggested generally with the ethics, do a blind test. Send someone in to act as if they're a federal employee that has information about a competitor's proposal and wants to discuss employment, or a situation where another company comes in and indicates that they have inside information about a procurement that'll help a teaming opportunity. See how your organization reacts to a test like that, and if it doesn't follow the chain in your ethics code, you may have saved yourself hundreds of thousands of dollars by catching it this way and being able to determine that. And we help firms do tests like that all the time, and this is a great example of the ounce of prevention being worth a pound cure. Follow the best practices for administering the disclosure rule, which is on the slide before. And then if you have questions about whether credible evidence exists, certainly you can seek professional guidance. I mean, typically, the reaction is when you get this information, you're supposed to do a form of internal investigation, and it is something that some firms do not do. But the internal investigation would be done under privilege, and it would be you look at it, you make an assessment, and then the company makes the business decision about whether or not it's willing to take the risk of not disclosing it. Some of our clients decide, you know what, we're going to make the call. We're not going to disclose it. We don't think that it rises to the level of a disclosure. Others make the other call out of an abundance of caution. Each decision is obviously based upon its own facts. Well, I hope this. I know we've compressed a lot of material in a short time. There are books written on each of these subjects, so we've tried to give you the high points, and we appreciate your taking your lunch hour and your pre-Halloween preparation time to spend with us on this. And I now want to turn it back over to our staff for a few administrative notes and also questions. Thanks.
Thank you so much, Al and Brian. That was a great presentation. Definitely a lot of information put in there, but we learned quite a bit, and we'll be able to review all this material. Now we have time for questions and answers. So we've already gotten quite a few questions submitted, and we have just about 6 minutes left in the hour. So we're going to get to as many questions as we can. Please feel free, if you do have a question, please type it into the question panel and go ahead and submit it. And any questions that we cannot address at this time, we will certainly follow up with you individually after the presentation. The first question that we had, and there's quite a lot of these, is requests for these slides. Will the slides be available to attendees, and will the webinar be available for review later? That answer is yes. We will be sending a follow-up email tomorrow, which will be coming from Hannah Patrick here at Winvale, and that will have a link to the recording of the webinar and also the slide deck that you can download a PDF file of. That recording will also be available on Winvale's YouTube channel, so you can see everything there and see the video and replay the entire presentation. The next question that we have is, what if the contractor does not track pricing for its customers? How can you comply with the pricing requirements? And I'll give this to Brian.
Thank you, Heather. I think that question kind of answered itself. If you're unable to track pricing to the basis of award of most favored customers, then GSA certainly would take the position that you can't maintain pricing compliance and ensure the price reduction clause hasn't been triggered or violated. So that's when we talked about the controls and the system and making sure that's in place where you have transparency. Regular transparency over commercial sales transactions to that customer and enforcement of a pricing floor, and if it's triggered, what do you do next? Do we make notes in the file? Do we make the disclosure to GSA? Certainly the price reduction clause says if you find something, you're supposed to do it within 15 days. So you can't monitor commercial sales data every 3 or 6 months, and it needs to be pretty regular maintenance of it.
Great, thank you. This actually leads into another question that was asked, and that is, how does GSA enforce the price reduction clause?
Well, that's a tough one to answer in a few minutes, but there are different shades of color when it comes to this. The first is what's the degree of violation? Are you a small, young company just trying to understand the regulations? GSA will sometimes work with you, and enforcement of it might just simply be a price reduction mod that'll get pushed through the system where you think a commercial basis of a work customer received a better price, and so GSA for those particular items will now get a lower price or greater discount. If the violation is more egregious, larger, then they can certainly, with that data, they can turn it over to the Inspector General's office and look to resolve it a different way. But obviously, the more that we can control the review, what we're finding, and how to react to it, much more better than being pushed down the street by an IG auditor and forcing disclosures into their deadlines and having to write a big check at some point.
Great. Another question to do with tracking and monitoring of sales. Can you recommend some simple methods, techniques to track and monitor the sales and basis of awards?
Well, this is Brian. So this is a question that we really try to rely on technology first. I don't know if you use a program, an ERP platform like Salesforce. There are a number of quote tools out there that you can restrict who you sell to and how you sell, so you can enforce a pricing floor. If you've got salespeople who operate independent of the company, there's a floor that they can go down to, but you can't go beyond that. Also, we're talking about from the very beginning updating sales policies and workflow charts. So communicating and giving something to them so they understand if they're selling something commercially that is also on your GSA contract, then it sets off the following rules. They can do this, they can do that, but everything else needs to have management approval. So it's a two-phased effort. It's documentation and training, and then getting the system or the controls in place that you can enforce and monitor sales transactions better.
Great. And I think we just have time for probably one more question. There are several others we unfortunately won't be able to get to. We want to keep in line with our schedule and keep considerate of your time today. So I'll just ask this last question, and we will follow up with everyone else individually to make sure that we answer all of your questions. The question is, I'm always uncertain as to how to count work when we are a subcontractor. Is that a commercial sale?
Hi, this is Al Kreichman. It's difficult to answer that question in a I guess, concise fashion. If you are a prime contractor, any vendor who is your counterparty, and if they are acting as a subcontractor vendor to you, those should be counted for purposes of your contracting reports, your small business subcontracting reports, if that's what your question relates to. The definition of subcontractor is very broad. It's under the FAR. Any firm that is supplying services or supplies to a contractor for purposes of performing a federal contract is a subcontractor, and therefore would fall within the definition. To the extent that your question is asking some different formulation, I'd be happy to answer it offline. My email address is on there, and we would be we can sharpen the question and perhaps give you a better answer. But we do appreciate everyone's time. Hope this has been informative, and would be happy to have a conversation or field an email from anyone about any of these topics as we go through the next few months for the exciting year end and the conflicts over the next budget, which obviously are on everyone's radar screen in Washington. So thank you very much, and I'll hand it back to Brian.
Well, this concludes today's webinar. Thank you to everyone for joining the call today. We hope you found it useful and insightful. And again, please don't hesitate to contact Al or myself for questions or comments. And as Heather mentioned, we're going to make the slide deck and the audio available tomorrow. You know, really appreciate it and hope everybody enjoys their Halloween holiday. Thank you.